So I have an exciting announcement. We're building a new website and we're moving to pureelliottwave.com on the 21st of August. For the first 24 hours after our website's launched, we're going to offer a special rate to a new service which is going to give once a week analysis of Bitcoin, S&P 500, gold and oil. And the special rate is going to be only $40 a month. That works out at a cost of $2.50 per analysis, which is less than the price of a decent cup of coffee. So that's a pretty good deal. After 24 hours, the price is going to increase to $50. So if you'd like to be notified of that launch and have an opportunity to sign up for $40 for once a week analysis of Bitcoin, S&P 500, gold and oil, then go over to pureelliottwave.com and give us your email address. After the website's launched, I'll delete all those emails. I'm only going to use your email address to notify you of this launch. And for the YouTube channel, I'm still going to be providing for free analysis of other cryptocurrencies, and you'll get Bitcoin analysis published randomly a few days after it's available to my paying membership. So I won't be doing that for free in a timely basis on the YouTube channel, but I will still be providing from time to time, when I have the time, analysis of other markets for you. There's another advantage to being a paying member of pureelliottwave.com. I'm a chartered market technician and I have ethics guidelines that I must adhere to, and I take them really seriously. One of those guidelines is if I see an investment opportunity that I want to take advantage of myself, I have to let my paying membership or clients know before I make my own purchase and give them enough time to execute their purchases before I do so. I interpret this ethics guideline to also mean that if I'm ready to sell an investment I hold, I also should notify my membership or paying clients and give them enough time to execute a sale before I do so. Because I know that the entry point when you buy is just as important as when you sell, your exit point, in order to buy low, sell high and make money. So if you're a member of pureelliottwave.com, you'll know what I'm doing with my own investments, because I have to tell you, you'll also have a little bit more hand-holding. I'm available in comments on a daily basis to answer questions and help you learn Elliott Wave. Okay, let's get into it. I have two markets I'm going to look at today with you. The first is Dash or digital cash, and the second will be Litecoin, and that's new. I haven't done an analysis for that before. I have analysed this one before, Dash, and I have a weekly and I have a daily chart. So I'm going to update this analysis and see if my last expectation was right, wrong, and what's happening next. And this is the weekly chart for Dash. This is the Elliott Wave count. Elliott Wave analysis first, classic analysis last, which is usual. So Dash has a pretty good looking Elliott Wave structure. This rise from back here, January 2015 to December 2017, subdivides quite well as a 5-wave impulse. So that's cycle wave 1. And then down here, a 3-wave structure, a double zigzag. W, X, Y looks complete. And now 2 is complete. I expect the next movement for Dash is the start of a 3rd wave. Cycle wave 3 must move beyond the end of cycle wave 1. That's one of the core Elliott Wave rules. It hasn't done that yet, and my analysis has it not yet moved through the middle strongest portion, so that's to come. Let's expand this out and focus now on cycle 3 on the weekly chart. So my last analysis, I was wondering if intermediate 2 could have been over. Primary 2 lasted 27 weeks. Last time I looked at Dash, intermediate 2 was only 3 weeks. Could it be over down here in 7 weeks? That's possible. Let's take a look at this at the daily chart level to try and answer that question. Let's just focus on the structure of intermediate 2 at the daily chart level. So my last analysis was looking at intermediate 2 possibly over there as a double zigzag, deeper than the 0.618 Fibonacci ratio. But it's obviously not over there. Despite this huge strength off lows and a huge bullish engulfing candlestick pattern, it did move lower. Could it be over down here? Let's have a quick calculation and see how deep it is in percentage terms to intermediate wave 1 if it is over there. 90%, that's a huge correction. Okay, well I don't think it's necessarily a double zigzag. Let's see if a single zigzag fits. That's the most common structure. I don't think A is going to fit, but let's have a look. Oh, maybe it will. I don't know. It looks like the third wave in here might be the shortest, which is invalid. Motive wave doesn't like it. Yeah, it's going to be the shortest. That's invalid. So I don't think it's a single zigzag labelled like that. Well, let's try a double zigzag. Okay, well, that could fit. Within 3 there could be 1, 2, 3, 4, 5. Let's put some labels in there so you can see what I'm seeing. Yeah, but is Y going to work? No, I have to put this here. C doesn't look very good at all, does it? Oh, I know. Oh, no. I was thinking, could X be a triangle? Only if it starts here. No, it can't be. Oh, could A be over here? And is this going to be truncated though? And there's an overlap and it's huge. That doesn't work. Oh, it could. No, it can't be a diagonal either. Oh, back to here. I think A's there and B looks like a flat. But then C doesn't work. This isn't going to work. Oh, or is it? Oh, hang on, is there an overlap here? No. I'm surprised that works. Oh, that does work. Okay, great. So intermediate 2 could be a complete double zigzag. It's so deep down there. I would expect it's over. I don't like trying to calculate targets for these markets. Well, I try, but I don't like it because they invariably blow all of your targets out, and the waves tend to be a lot longer than common Fibonacci ratios because of the extreme volatility in pretty much all of these cryptocurrencies. Let's have a look at some classic analysis now. Let's have a look at Dash first on a weekly chart, and then we'll look at it on a daily chart. So I'm using stock charts for classic analysis. On the weekly chart, I notice here, not at the low, but shortly after, we have a strong bullish engulfing candlestick pattern that has huge support from volume. So that's really bullish. We didn't see that at this previous low back down here. It's broken above first resistance, so now that's support about 145. Next resistance above, fairly strong, about 180. This resistance about 180, or the support at 45, was tested with resistance here, and now it's been broken through. The resistance in 180, tests of support here, now turns into resistance, and further off to the left of the chart. The on-balance volume has given us a bullish signal, but it's not a very strong signal. It breaks above resistance here, but this resistance line is not very long held and it only has 2 tests, and there's some slope there. So that's a weak bullish signal. ADX for the previous upward trend for Dash reached very extreme and RSI reached overbought and then exhibited double bearish divergence. So it's unsurprising we've got a pullback. This has managed to bring ADX right down from very extreme. It's still declining. The DX lines are whipsawing, but the ADX line is not below both the DX lines yet. We may see some sideways churn before that happens. It's brought RSI well into neutral territory. And stochastics is oversold, so I'd be expecting an end to this pullback soon. The daily chart may answer the question, is it over? And I notice not at the low here, I should note here there is a hammer candlestick pattern, so that's a bullish candlestick pattern at the low. And the next little swing low here, we get an absolutely huge bullish engulfing candlestick pattern with huge support from volume. At this low down here, we had a bullish engulfing candlestick pattern, but it didn't have support from volume, so we couldn't have confidence in it. We had bullish divergence between price and RSI, but it really only led to some sideways movement before this downward trend continued. But I think we do probably have a sustainable low here now, because this is such a strong bullish candlestick pattern with such strong support from volume. We had a death cross here with the 50-day moving average. Actually, I use a Fibonacci 55-day moving average, but either way, whichever one you use, that would have crossed below the long-term 200-day moving average, so this is a bearish signal. But let's put it into context with everything else that's happening here, and I'm going to give a lot of weight to this candlestick pattern here. I expect dashes pretty close to lows at the moment. ADX indicates, though, that there is an upward trend at the daily chart level, but it's already extreme. It's nearing very extreme. It's extreme because it's already above both DX lines. So we may get some pullback to relieve those extreme conditions, but I would not expect to see a new low. I expect this low holds, and so I expect this chart is offering reasonable support to the Elliott wave count that expects that the counter trend downward bear market is over and the larger trend of a huge bull market for Dash is continuing on to new all-time highs. RSI in neutral territory, this one can reach extreme and remain there for a wee while this market trends, and stochastics neutral, but if the market's still trending, then stochastics can stay overbought for quite a long period of time. It's pretty close to overbought. ATR is very low as well. Saw a slight uptick on these two sessions here, but it's declined here. So for the very short term, let's go back to the Elliott wave count. For the very short term, I would expect that we're probably going to see some pullback. Let's label minor 1 over here and minor 2 over here. But I don't think, is this going to be a leading diagonal? There's some support for the view that intermediate 2 was over here from that technical analysis. Yeah, oh no, that doesn't fit because 4's moved beyond the end of 2, so that's a valid. So I think we probably have a series of overlapping first and second waves underway. Okay, I'm not going to worry too much about the labels on this start of this new upward movement for Dash right now. Suffice to say, the wave count sees it in the early stages of a third wave at multiple degrees, minor, intermediate, primary and cycle, which is a very, very bullish wave count. And there's support for the view that we have at least a short term, if not a mid or long term low for Dash down here. Okay, let's look at Litecoin, and I've done no work on this. Let's start on a weekly chart and have a look and see. Oh, okay, so this was the high in December 2017. Let's view this on a semi-log scale so it makes more sense. We're still in what could be wave 1 price territory, so this still could potentially be a good opportunity. Let's get some Elliott wave labels in here. Longer term viewers of this YouTube channel, maybe I'll link back to that video below where I told you what I was looking for opportunities for investment in cryptocurrencies, so I'm not repeating myself. But this shows those things I'm looking for. Okay, now to answer the question, did it have enough volume back down here in order for good looking Elliott wave structures? We'll have a quick look at cycle wave 1. This structure should be over, and it lasts 153 weeks, so that's more than a year. So I think we need to put this down here. Cycle degree wave should last from 1 to several years. Okay, I need to expand this out. Can I put this here? Do I need to move it down to the left? Motive wave thinks I can't. Oh well, here's your problem to start with. This goes here, which means it has a better look as a 3, so then I think this is going to work now. Or is it? Oh no, it's still going to work. Oh yeah, this is actually looking really good in terms of Elliott wave structure. That looks really good. Yep, pretty happy with that. I'm not going to worry too much about the structure of cycle 2. I'll just chuck something in there. It looks like a zigzag or double zigzag. Either way it looks over. And it's academic now. So, cycle 3. Where is my cycle 3 label? Let's put some labels in here. So we'd have primary 1 and 2 over. That's a huge correction. It's going to calculate the percentage of that just for academic curiosity's sake. 98%. Wow. What a hugely volatile market. That's exciting. Okay, first off, we can't put primary 3 and 4 here because primary 4 would be back in wave 1 price territory. So that leads to a very bullish wave count, which sees intermediate 1 and 2 over here. Now intermediate 3 within primary 3 within cycle 3 just about to begin. And price still within cycle wave 1 price territory, which means eventually when cycle wave 4 arrives, it has to remain above 375.286. It can't overlap, and it usually is a lot above. The low of this primary 4 at 32 is way above the high of primary 1 at 238. Okay, well I don't really actually want to spend too much time on intermediate wave 1. It's a complete impulse, and here's the middle of the third wave. Let's chuck some labels in real quick. It's so obviously complete because any channel containing this is now breached by this, and this is pretty deep in comparison to this. Well, okay, it's pretty obvious to me. What structure is intermediate wave 2? I see a huge bullish engulfing candlestick pattern here. When we get to classic analysis, let's see if that's got support from volume. Let's try a double zigzag. No, let's try a single zigzag. It's either a single or a double zigzag. Second waves can't be triangles. It's obviously not a combination because they're sideways movements. It's obviously not a flat because there's no bounce within it that meets the minimum requirement for a B wave of a flat to be 90% the length of the A wave. Oh no, I want to label this here. And this is going to be here. Does this first wave fit as a 5? Or is there an overlap between 1 and 4? I think there's an overlap. No, no overlap. Perfect. That looks really good. And now I see a running contracting triangle here. No, you've got to put A here and B here and C here. Now do the triangle trend lines work? They have to work. Oh, they look pretty good. You could put C here and C could be the double. Yeah, I think that's right. Elliott wave triangles should adhere to their trend lines really well. Here's a test of the trend line here and a test here. If I put C here, there's a little overshoot here. That's acceptable, but it looks much better if C is here, and then C would be the multiple. One of the triangle subwaves should subdivide to a double zigzag or a multiple, and 4 of the 5 triangle subwaves may only be zigzags or a zigzag multiple, which means one triangle subwave doesn't have to be a zigzag or a zigzag multiple, and very rarely you'll see it as a flat, and sometimes that's wave A. So this looks like a really good Elliott wave triangle. My label here isn't quite right. Let's put that down there. That's better. And intermediate 2 looks like a pretty good zigzag. And C's moved beyond the end of A. C is really short in relation to A. That's okay. They do have a tendency to equality. That's the most common relationship between those two waves, but they don't have to be equal. Sometimes C will have a Fibonacci ratio to A or vice versa. If one does, the other does, obviously. Let's see if there's a relationship here. Okay, so well, C is much shorter than 0.382, the length of A. It's shorter than 0.236. Oh wow, it's so close to 0.146, the length of A. 0.146, the length of A is 44.88, and C is 44.77. So it's just 0.11 short. That's so close. It's not a common Fibonacci ratio. A is extended, C is not extended. Guideline of alternation, that's fine. It is absolutely acceptable. So I'm just going to put a notation in here to make a note of what I found. That's really interesting. It's good to see when these markets, these very extreme, highly volatile cryptocurrencies do exhibit Fibonacci ratios. Because then if you know they do sometimes, they won't all the time, but it can be useful in target calculation. And I have noted that when they do exhibit ratios, well, I'm talking about between the actionary waves now, not, well, A and C are actionary waves, but I mean between waves 1, 3 and 5 within an impulse. If they do exhibit ratios, they tend to be very extreme. Okay, so I think that's the wave count for Litecoin. That's what I have here. Let's look at some classic analysis now. Let's look at a weekly chart first of Litecoin, have a look at some classic technical analysis using the same tools I usually use. I notice at this high here, there was double bearish divergence with price and RSI after RSI reached overbought. So it reaches overbought here just above 180, but it didn't find the peak until just about 420. So it more than doubled its price once it reached quite deeply overbought. Another thing I notice here is this peak here. If you had looked from this peak to this peak to this peak, here to here to here, you would have seen double bearish divergence, and yet this was about just under 340, and yet it had another pullback and a final peak which made a high in terms of RSI and price. So that would have been quite tricky to identify this final sustainable high, and it could have been that the only thing that could have given you an edge there would have been a good Elliott wave count, and if you had, this would be a third, fourth, and you would expect a fifth wave. That could have been the clue if you had had the right Elliott wave count though. Okay, I've just checked the length of the long lower wick on this potential hammer candlestick pattern, and it's only 1.8 times the length of the real body, so I need to get rid of that. That is not a hammer. I'll take that off this chart. It's got a bullish long lower wick though, so we've got 1, 2, 3 bullish long lower wicks at these 3 lows. RSI hasn't managed to reach oversold. It didn't do it back here either though. We did have a little bit of bullish divergence between these lows and price, between RSI and price, but RSI didn't manage to reach oversold. It's closer to perfectly neutral now. It's pretty close to 50. Might get some more downward movement. There was a little bit of support from volume for the last bullish candlestick pattern here, which again is not a hammer. I will take that off the chart. A weak bullish signal from on balance volume. ADX still declining, no clear trend, not yet below both DX lines, but getting pretty close. ADX oversold, and ATR showing weakness in the latter half of this bear market, starting to decline now. What about the short-term picture? There's a strong bullish engulfing candlestick pattern here, but it lacks support from volume. That's concerning. We may not have a low in place here. I've noted this as a hammer, even though it's got a little bit of an upper wick. It's not a very good hammer, but this is a very good bullish engulfing candlestick pattern. Support about 107, resistance holding about 140. If it breaks through that, resistance at 180, and then 245 and 335 above, but can it do it? A weak bullish signal here from on balance volume. This isn't as weak as the weekly chart though. This is a little stronger. A break above resistance, a test of support, maybe ready to move up and away. As price moves up though, we're still seeing ATR decline. Sometimes this happens early in a trend for these cryptocurrencies. I've noted a few of them do that before. Maybe Litecoin has that tendency as well. ADX reached very extreme for this downward trend. Well, no, not very extreme, just extreme above both DX lines, but it didn't reach above 45. It's now declining, indicating no clear trend. A potential change to up with a cross of the positive DX line above the negative, but the ADX line still declining, so no clear trend yet. RSI in neutral territory, room for, if an upward trend does develop, room for it to continue. It did just dip into oversold here. This is hidden bullish divergence, but that's pretty weak, so I'm not going to note it on this chart. And stochastics returning from overbought. Let's go back now to the Elliott wave count and try and make a conclusion for Litecoin. I'm not fully convinced that the low is in place here. It could continue lower as a double zigzag, but let's see what is the percentage of this pullback here. This is only a 79.7 or pretty close to 80% pullback. And this market, I think we looked at this one, it was well over 90%. It could be deeper. I think for Litecoin the pullback may not be over. I think I might actually like to relabel this, move this down 1 degree. This is one reason why I love Motive Wave. This is so easy to do. Look at that. It's all moved down 1 degree. And I'm going to pull in a double combination here. It's a double zigzag actually. It's a different kind of structure. And let's make this minor degree. So this could be the first zigzag in a double. And we could have a second one. I would expect the second one, considering the little small amount of movement for it to move into, is going to be shorter than the first, but it may exhibit a Fibonacci ratio. Not convinced X is over, but let's put a label in here. Okay, I think that's going to be my Elliott wave count for Litecoin. I think it's setting up for an absolutely huge move, but I don't think the low's quite in yet. I think it's got a little bit further down to go. Whereas Dash, I think the low may be in for Dash. Now finally, I'm going to have a look at the correlation coefficient with you today. Actually, no, maybe I'll do that in another video. This video is just going to be 8 years long. That's ridiculous. So thank you so much for those of you who watched to the end. I know that was rather long again. I keep doing this format though because I think some people learn how to do Elliott Wave from watching me work, and I find it lots of fun. It's just a really different format. When I eventually do prepare Bitcoin for a paid service on a regular weekly basis, and it'll be probably produced on a Monday so that I have the weekly candlestick to work with, the format of the video won't be like this. It'll be more formal. I'll keep it brief, succinct, and I'll have all the analysis worked out before I record the video. More like the videos that I'm putting here for gold, well, not gold anymore, for the S&P and the US oil. That's all from me. Thank you so much for watching.